Fractional CFO services have been gaining more popularity in recent years. And you as a small business owner, you might be thinking, okay, maybe I'm curious about hiring a fractional CFO, or maybe I have one, but I'm not really sure if this service that I'm getting is also what maybe a different service might be providing. So what I want to do today is talk about what is table stakes, like what should any fractional CFO be providing for you? And then what are the things that I think fractional CFOs really should be doing, kind of that above and beyond, not just the table stakes, but like what is the thing that's going to make a fractional CFO be an incredible partner for you in your business as you grow. So if that sounds interesting, I'm going to get into it. I have been a fractional CFO for the past, 7 years, 8 years, something like that. And I have seen it, worked with tons of small business owners. I've seen, and I've talked to lots of other people providing different fractional CFO services. I've seen people calling things fractional CFO services that really should not be called that, where it's maybe a little bit more of like glorified bookkeeping. And, if you're paying for fractional CFO services, it's usually not a cheap service. So you need to be getting what you're paying for. And I want you to be informed of exactly what that should look like. So if that sounds good, keep watching. Before we go any further, I want to tell you about today's video sponsor, and that is Relay. Relay is a modern business banking solution that will help you gain cash flow clarity in your business. Relay has been built with the needs of small business owners in mind, and they have all the tools you need to gain confidence in managing your business money. You can have up to 20 bank accounts, which you can set up completely virtually, and you'll never have to worry about monthly bank fees, overdraft fees, or account minimums. To learn more about Relay, you can go to claracfo.com/relay. And for the Clara CFO community, Relay is offering $100 when you open up a new bank account with Relay and you fund that with $100. So they'll basically match your first $100. So if that's something that's interesting to you, definitely go make sure to check out Relay by going to claracfo.com/relay. So when we think about fractional CFO services, there are some things that everybody should be doing. If they are calling themselves a fractional CFO and they have a client, they should be doing things like budgeting for that client. They should be doing forecasting, whether that's a short-term forecast or longer-term, 3 to 5 year forecasting, whatever the client needs. They should also be in charge of the financial reporting of the company. This fractional CFO should be looking at the financials and determining, does this set of financials give us the information we need to tell the story of what's going on in the business? And if not, they should be helping to make improvements there. Fractional CFOs should also be identifying KPIs, and they should be helping the business understand what are those key performance indicators that are really going to matter and start to improve the business as you start tracking them. And they should be able to help with figuring out how to track those metrics. They should always be worried about and concerned about the profitability of the business, and they should be looking at how to improve the overall cash flow of the business as well. All of those things are basic functions of a fractional CFO, okay? So if your fractional CFO is not doing those things for you, you first need to have a conversation with them and say, hey, I don't think that this is happening. And then see if that's what you've actually hired them to do and maybe they're just not doing it. You might need to, have a little come to Jesus moment with them. But if they are, that's great. We love that. Or if you're saying, hey, I don't have anybody in my business doing that right now. Aha, that's what a fractional CFO does. You're welcome. So hopefully, that'll be a little bit of insights to what you can expect if you are going to hire a fractional CFO. So what I want to go into next are 10 things that I've identified that I think make a CFO an amazing partner for your business as it grows. Because, the financial piece and actually being able to run all those numbers, super important. You have to do that. You have to have that in order to be able to make the decisions that you need to make in your business. But to really have a partner that truly understands your business, even as an outsider, like if you're hiring this person as a contractor, you want them to have these additional qualities and these additional abilities. Okay, so that's what I'm going to lay out here for you. And I've got 10 points to go through with you. Okay, so the first one, very, very important, is that your fractional CFO should prioritize your company goals. And that means they need to be asking about your goals. If your fractional CFO does not ask about what goals you have for the business, That is a very huge missed opportunity. And also, how are they going to be strategic if they're not asking you what your goals are? You know, when you hire a financial strategy, you want to have somebody who understands the direction that you're going. The strategy is going to be very different if you want to sell your business in 3 years, or you want to grow it to be $50 million and you start at 500,000. Like, we've got really different strategies kind of depending on where you want to go with the business. They also need to understand your personal goals with the business. What do you want to do? Is this just a cash flow business for you where you just need a certain amount of income coming in? Is this part of your overall long-term planning and you need to get the business to be a certain size in order for you to then sell it so that you can get a certain amount of cash from the business? You need to share your personal goals and your long-term goals, but your CFO needs to be very clear on what your goals are. And if you don't have goals, your CFO should be helping you figure out what those goals are by asking you questions and pulling that out of you, okay? So that there can be a strategic direction for the business. So the second thing that's really important for a small business CFO or a fractional CFO is that they need to have a good understanding of the operations of the business. So they can't just look at the financials and say, yeah, okay, profit is doing this, or expenses are doing this, revenue is doing that. How are they going to advise you if they don't understand what the actual ins and outs and how your business operates, how it actually makes money, who are the critical employees in the business, and how does a product get moved from one place to another? How do you provide services to your clients? You need to know those things. Your CFO needs to know those things in order to be able to provide better advice. And then the understanding the operations of the business is going to bring to life the financials so they can be a better advisor. So they need to be having regular conversations with both the CEO of the business and other key individuals in the business as well. So ideally, they are able to have discussions with other team members throughout the business so that they can gain that really deep understanding of operations. The third thing your CFO should be doing for you is they should be providing some level of oversight to the accounting function in the business. And what I mean by that is that maybe you have internal accountants in the business or, internal bookkeeper, but maybe you have an outsourced bookkeeping provider and you're definitely using an outsourced CPA to do your tax return. Those different accounting functions need to have someone to report to, a centralized reporting person, and somebody that they can go and have someone who can answer their questions. So instead of that being the CEO of the company, so that the CEO doesn't have to be the direct report to the bookkeeper, for example, the internal bookkeeper shouldn't be asking all their questions to the CEO necessarily, or the CPA having to direct all their questions to the CEO. The CFO can be that person. So we like to say that the CFO seat can be a liaison between all these different parties, and they can also be kind of that first line of defense for questions so that the CEO can be spending more of their time running the business and not necessarily, having to track down a question for a bookkeeper, for example. So the CFO, just like it would be in a large corporation, if you have an internal CFO, they would be the head of the finance and accounting department. The fractional CFO should act somewhat like that so that they understand all the different pieces of what's happening on the accounting side and questions can roll up to them. Now, that doesn't mean the CEO won't be involved, but they should be able to handle a lot of that lower hanging fruit and should be able to, help guide those different pieces and understand what's happening of the different accounting roles. Your CFO should also be able to understand the software that you're using in your business for accounting, and they should be able to advise on accounting software improvements. So let's say that you are having a tough time with receipt capture in your business, and it's taking an individual in the business tons of time to go and track all the different types of receipts from all the different people who've been spending money, and it's just getting really crazy. So a good CFO is going to be able to see lots of different software that other clients have used, and they're also going to be staying up to date with what is out there in the world so that they can recommend if you need a new bill pay software, or maybe your payroll provider is just really not doing the right thing with you. They should be able to either help you research, or they should already know a good potential solution based on your situation. Okay, so do look to your CFO if you are thinking about making a change or you have a major problem internally. They should be identifying that. Like, probably they're going to recognize that you're having a problem, but you should also be able to have that discussion with them and ask them for recommendations. Okay, number 5 here is your CFO should be able to advise on your business model or your revenue model. So they should be able to see how your business is working, and they've worked with a lot of other businesses as well, and maybe even in your niche, where they might be able to give you advice and insights on how your business is running and if there's a way that it could be improved. So sometimes we set up our businesses and we just kind of do it the best that we can, but then we realize like, hey, this is actually not working, and the CFO can see that too, and they can advise, hey, what if we move into a retainer model for this service? Or what if there is a better way to structure these agreements with your clients, because the way that it's working right now is not working. So they should be able to kind of see those, step back and get that like 30,000 foot level view to say, this structure is not working for you. How can we move it and change it and make it work in a better way? So they should be kind of having that 30,000 foot view on the business, and they should be able to provide advice to you. All right, number 6. Your CFO should be able to support your decision making. And yes, that's like any CFO should be able to support decision making, but specifically they should be backing it up with financial tools and analysis. So instead of just saying, hey, I feel like this is a good decision based on your financial reports, or I feel like this is that, they should be able to show you the financial implication of your decisions. So they either will show you in your forecast of what that looks like, or they might be able to build decision making tools for you. So for example, like we have a tool that's called a cost of hiring worksheet. And with that, we can easily show a client how much every new hire is going to cost them based on their cost structure of how, what they do for employees, between their health insurance costs, their 401k that they offer, and all the software that they offer, and the hardware that they buy their employees when they first start. So, we do have that available, but like that's something we have it available for purchase, but we also have it available for our clients so that they can have that tool in their pocket at any point in time. So if they're trying to figure out what's the cost of hiring, a $50,000 annual year employee or a $75,000 annual salaried employee, they can easily see what that monthly cost is going to look like really easily. So your CFO should have some ability and tools to be able to plug in the decisions that you're making and show you what that looks like. Okay, what does the cost actually look like? Number 7, your CFO should be able to help you with banking and financing recommendations. So if your bank is just really not working for you, your CFO should be able to recognize that, first of all, and they might be saying, hey, you're really struggling with this bank. It doesn't have to be that way. X, Y, and Z are the problems, and if you moved to another bank, X, Y, and Z might not be an issue. So they should have banking relationships of banks that they know and that they've worked with before, and they should be able to look and assess your situation and make a proper recommendation for you. Now, this is always done in conjunction. We would never, as CFOs, say you have to move to this bank or you have to do that, but we can make recommendations to say, hey, this might fit your needs and this might fit your needs, and it might be a good thing for you. Another thing is with financing. As a CFO, I have relationships with banks where I know that certain banks that are lending, if a client needs something, I can make financing recommendations for banks that I know that have are currently lending. But we can also have those discussions with clients, and a good CFO should have discussions with clients to say, hey, how much do you need for financing if you need to go out and get a loan? Or, do you just need a line of credit for kind of a just in case situation? Like, they should be able to have those discussions with you to say, what does your business really need in order to finance what you want to do? Or is it something that you actually need to go out and start getting investors for? So a CFO should be able to help you with that. Number 8, your CFO should be able to present financial information to boards or other third parties. And so this means that your CFO should have some level of ability to compose themselves and be able to talk in front of other people. And present data and tell a story. That is a pretty important thing, because if you have an outside, maybe you have a board of directors or you have, some other kind of advisory board, your CFO should be able to show up to those meetings and be your, financial person in the room, to be able to speak eloquently about the numbers and to be able to answer the questions that they may have. You might also have third parties where maybe, let's say you're going through a potential transaction and you have, maybe some potential investors on a call, or you have somebody who might be interested in purchasing the business directly. A CFO should be able to sit in on those meetings and to be able to present and talk in a way that makes your business look good. But your CFO should be able to show up and show these outside parties that you have your financial house in order, because you have a very competent CFO on your side. Okay. So that can be like a very big value add to somebody during that time, especially during a transaction, if they know that you've got a CFO on your team. Okay. Number 9, a CFO should be able to interpret financial information and deliver it to anyone. So I mean that your CFO should be able to look at your financials, understand what's happening, and be able to speak in plain language to anybody in the organization that needs to know information about the financials. So for example, if your CFO needs to share goals with the sales team, for example, or if you are talking in a leadership team meeting or something like that, your CFO should be able to communicate on a level that meets the audience where it is without, using a bunch of jargon and talking over people's heads. You want that person to be an effective communicator and be able to tell the story about what the financials are saying to the appropriate level. The other thing about that is that the CFO should also have the discretion to understand when information should be shared with different levels of the organization and when it should be held more closely. So sometimes that's a conversation you have directly with the CEO, so you understand what their comfort level is, but your CFO needs to protect your financial information, and they also should know when is the right time to share and when is not the right time to share. Okay, so there's a little bit of discretion needed, and the CFO should know that. And then number 10, your CFO should look at your business and always be assessing it for business and financial risks. So risk assessment is a big part of the role of the CFO. They should be able to see, are we covered by the insurance that we need? Is there a financial risk specifically, like maybe are we at risk of having our funds in our bank accounts not being covered by FDIC insurance? Do we need to be watching that and maybe opening a separate bank account? So it'll be impossible for just the CFO to be in charge of risk management. There's going to be different parts of people in the organization that also need to be paying attention to risk. Obviously, the CEO should be a part of that. And if you have any other senior leadership, they should be a part of that. If you have a legal team, they should be a part of that as well. But the CFO should understand things like, the risk of audit for your tax return, the risk of maybe taking certain stances on your taxes where maybe, it is a little bit more in the gray area, for example. Your CFO should understand that. So there's lots of different things the CFO should be paying attention to in order to assess for risk and then help the business mitigate it. Now, there's going to be times where a CFO might bring something up and just say, hey, this is a risk. Like, for example, sales tax compliance. They might be saying, hey, you are starting to do business in this other state. Anytime you do business in a new state, you need to be looking at your sales tax compliance when it comes to selling products. Maybe we looked at the levels and you haven't hit it yet, but it's something that we need to be aware of. And it's something like a compliance risk we're going to need to look at into the future. So the CFO should be kind of keeping an eye on that big picture risk assessment. Okay. That's 10 things that I think are pretty important. I would love to hear what you guys think. Would it be helpful to have a service like this for your business? If so, please make sure to reach out to us if you're looking for CFO services. We would love to support you in that. This is something that we feel very strongly about, that the CFO is not just someone who looks at your financials and tells you that you need to reduce your expenses and increase your revenue in order to make a profit. We know you're smarter. You're smart enough to figure that out on your own. So we really believe that the CFO service is so much more than just analyzing the financial statements and telling you what's there. There's a lot of other things that we can do for you to help your business grow. So hopefully you are having this support on your team, but if not, please feel free to reach out to us. You can find our contact information in the description box below. And also, I'd love to hear if there's other things that your CFO does for you that are very helpful for your small business. All right, everybody, that's it for today. Talk to you later.